Creamer Media's Mining Weekly is interviewing Jared Kutzer, the head of investor relations at Harmony Gold Mining Company, which has just made headlines on the first phase of its solar power sojourn. Jared, can you please outline some of Harmony's power project history and why Harmony has chosen these specific sites in the Free State for phase one of the renewable energy rollout?
This is a project which has been a long time in the making. The plans for our renewable energy program actually started around 4 years ago. I think we always knew that there was this necessity to transform our renewables or our energy consumption. So the plans really began quite a while back. Obviously, it's a long time. It's a new science for Harmony. We're gold mining specialists, not typically renewable energy specialists. So we had to do a bit of work in understanding the science behind renewable energy. And we decided to go with phase one and put these sites near our Free State operations, Tsepong and the Nyala plant. Those are two big operations. We've got a lot of hoisting, a lot of pumping there, and they're typically longer life assets. So we try to align the renewable plants with our longer life mines in the Free State, so that we could get maximum utility from the power from these plants. And obviously, the original plan was to do an off-balance sheet structure. Given we weren't 100% sure exactly how that would work, but we very much now, we've done the numbers and we're really happy with what we've seen. And we're very excited that we're breaking ground imminently on these three plants.
Who will be building and operating these solar projects?
Old Mutual has actually taken an equity stake in this, along with Mhlaka Equity Fund. They'll be the equity partners, and RMB provided the debt financing for this. So it's through a third party. We're doing it through a PPA. After 15 years, the plants will then become Harmony's. They are being built on Harmony land, but they are being constructed, managed, and we will obviously have engineering oversight, given they are, being used to power our operations.
Give us some insight into your decarbonisation strategy and how these solar plants will contribute to that strategy.
We've got quite a robust decarbonisation strategy. There's a number of factors at play. First of all, I think we've got a clear plan to actually decarbonize over the next few years, with our ultimate goal of being net carbon zero by 2045. So we'd like to have a 20% reduction in our CO2 emissions by 2026. And we would then like to progress with our renewable energy rollout from phase one to phase two to phase three over the next 4 years as well. This is a 30 megawatts renewable plant. Phase two will see us rolling out an additional 137 megawatts of solar or renewable energy. So it's really a first step in a far broader picture. I think Harmony is also, we've also got to understand the types of assets we own. There are deep level energy intensive mines. So what will typically happen is, as some of our older assets such as Bambanani and Masibong reach the end of their life, Bambanani is closing at the end of this month. Masibong will probably close towards the end of the next financial year. We will see a lot of our energy consumption naturally taper off. But the plan is to have an energy split of around, I think, 30% renewable energy by 2027.
When you look at the overall sustainability strategy of Harmony, what other benefits will flow directly from these projects?
First and foremost is we're obviously de-risking our business. So I think we've all been very familiar with the tariff escalations over the last few years, the rates of load shedding. We typically don't suffer from load shedding like the retail consumers, but we do have load curtailment where we actually have to hoist off peak. We've got an agreement with Eskom where and when we use energy as it relates to our hoisting and things like that. So obviously this will go a long way in reducing that demand. And obviously from a savings perspective, the price of the renewable energy is about 25% cheaper than what we're currently paying from Eskom. I think the other plan is obviously that we can sustain our mines for a lot longer, thereby creating jobs, sustaining jobs. The plants themselves will employ a couple hundred people as well. So overall, there's a broad picture as it relates to operational benefits, environmental benefits, sustainability benefits. It weaves its way into our ESG story. I think checking all the boxes simultaneously.
How much will Harmony be saving on electricity once these plants are operational?
So we're paying about R1.34 per kilowatt hour from Eskom at the moment. Our energy consumption from these plants will be at about 99 cents. So you can see that's the absolute savings. But when we look at the consumption or the demand side that we get out of this, we will typically be saving around 20% of our peak daylight demand. Now, obviously, the solar plants only operate during the day, and we've calculated about 6.5 hours of sunlight that we can actually use to power these plants. So it'll be about 20% of our free state demand, peak daylight consumption as phase one, and about 6% of Harmony's overall daylight demand for the group. So that's just the phase one. Obviously, phase two will step up and we will create a far larger offset. But I think also one of the benefits we've got to be cognizant of is the carbon tax, which is set to be implemented, I think, after FY for 2025, December 2025.
What about the 1.5 billion green loan?
That's quite exciting. I mean, that was a first for Harmony, and I must give credit to our treasurer, Herman Perry, to actually renew our credits and our facilities with the banks. But part of this refinancing of our facilities was the 1.5 billion rand green loan, which has been ring fenced, and that will be exclusively used to build our solar plants as part of phase two. So as I mentioned, phase one is an off-balance sheet or PPA in place with our third party, where we'll take ownership after 15 years. Phase two is actually going to be built on Harmony's balance sheet. We obviously got numerous sites around the country, the West Wits, the Vaal River area, the Free State. We will determine where best to place these solar plants. And that will be the proceeds of that green loan will be used to build these solar renewable plants. So very exciting. And I think certainly, from where we started 4 years ago, when we felt we needed to do an off-balance sheet structure with our third-party energy providers, now we've come to realize that it actually makes sense for us to allocate capital to renewables on balance sheet. So I think that's where things have changed over the last few years. I mean, we are obviously in the mining business. We're always looking to develop and go deeper. That's the nature of gold mining. But it's becoming equally important to actually address the sustainability issue, decarbonisation, supply of water to our plants. So we really are, assessing each and every project in its individual capacity as it relates to sustainability and how best we can de-risk the business going forward. So the 1.5 billion rand is certainly going to go a long way in assisting us in our decarbonisation journey.
Can just take us through the funding requirements for phase one of the renewable energy rollout and how this compares with phase two?
So phase one is completely, we didn't fund any of that. That's purely a purchasing power agreement. Over time, we will acquire that asset from the equity providers. And then we'd obviously determine what next we want to do with the project. If mines like Tsopong, long life assets are still operational, that will obviously be used to continue powering these operations. Alternatively, I mean, we could look at distributing power into the grid and sustaining some of the host communities around our operations as well. So there are numerous options which we have, and I think that's what's quite exciting is that as a mining company, we've now have the opportunity to generate so much of our own capacity. But being a deep level mining company, we've also got an abundance of water. So we're looking at how do we take advantage of these wonderful assets that we've got and potentially roll them out into the communities going forward once our mines reach the end of their life.
And just unpack more about phase two and what the expected costs and saving will be, and where will the 137 megawatt be situated?
Yeah, it's quite a big project, Martin. So we're looking at about 1.5 billion rand for our initial estimates on these plants. But the exciting part is that we would pay that back in 3 years. So we're looking at about 500 million rand a year in savings just on our electricity. So if you obviously pay that back in 3 years, but you've got these plants for 20, 30 years, very attractive from a financial perspective. And I think that's really how we're trying to allocate our capital, is to determine how we can check 3 boxes at once. We can check the sustainability box, we can de-risk the business, and make financial sense for our shareholders and obviously for all our stakeholders. And these projects are a good example of how we can, as our executive for sustainability, Melanie Naidu from Mark likes to advocate triple bottom line reporting, planet, people, and profit. And I think that really is where we're looking at allocating these funds to, really check all 3 of those boxes. So we're very excited about it, Martin. It's a great initiative, and I think being South Africa's largest gold producer by volume, it's a step in the right direction, and certainly an important step for our country.
And when it comes to these PV solar plants, how does Harmony weigh up capital allocation decisions?
It's quite a tough one, because there's obviously, there's limited capital and unlimited wants, your typical economic equation, where we've obviously got our plants, or rather our operations, which need money, and we've got to develop, as mining, as we know, is a depleting resource. We have to spend money in order to extend the life of these assets. But we also need to be cognizant of the fact that, the times have changed. I mean, we don't have the luxury of cheap power anymore. We don't have the luxury of, fossil fuels. So we need to look at the alternatives. So we obviously have to weigh up allocating capital towards our natural capital, renewable energy, our people, resources, and obviously developing and extending the life of our assets. So it's a balancing act, and I think we've done a very good job in the past. We've always done a good job of allocating capital effectively. I mean, Harmony's been very disciplined in how we allocate our capital, and I think this is certainly another example of a great financial and sustainable project.
And what is Harmony's sustainability development policy?
We've got a number of frameworks that we use from a sustainability aspect, and I think, as I said, we're trying to balance the E and the S now from mining perspective. I mean, we've obviously adopted the United Nations SDGs as part of our guidelines. We align to the World Gold Council, as well as the Task Force for Financial Related Climate Disclosure, or TCFD. So we've really got all the frameworks and structures in place from a reporting perspective, and I think that's really where we find ourselves as for many years. I mean, a case in point could be a mine like Bambanani, which we extended the life of mine for around 20 years. That is typically your ESG in action, but that's more related around the S side of things. I think now what we're seeing is an uplift in our environmental, journey as well, where we're focusing on the land rehabilitation. I mean, a very exciting, business which we've got now is our surface retreatment business. For example, the Querant extension, which was recently approved. I mean, through that project, we now got the option to extend that life by 16 years, further retreating the land in the whole Vaal River region. So it really is it's a complex and complicated framework which we've got, but it's because we've such a big, complicated business with so many stakeholders, so many people with vested interest in Harmony, that ESG is certainly something, or sustainability as we call it, is embedded in everything that we do, and really takes the front seat when driving business decisions.
Why do you believe ESG is part of your DNA?
Yeah, I mean, I think that it almost checks that box as well. I mean, we've got 11 mines across our jurisdictions. We've got the Hidden Valley operation in Papua New Guinea, which is an important strategic asset for us, as part of our plans for the Wafi-Golpu JV, and we've got 10 operations in South Africa, and we are a labor-intensive business. The nature of deep level mining is labor-intensive, but it's also an energy-intensive business. We've had reliance on Eskom for many years, so I think that certainly as relates to ESG as part of our DNA. I mean, through taking older assets from other mining houses, recapitalizing, extending their life. An example, as I said, was Bambanani, which we extended the life for 20 years. Another case in point could be the Moab Khotsong asset, which we're investing in now through the Zyplots project, which we've extended that life by 20 years. So we'll see that whole Orkney-Stilfontein region benefit for many, many years because of these projects which we undertake. And I think that's really where we pride ourselves in our ability to actually do these decline systems to extract value out of these mines, where typically other miners would not really see a life for a lot of these assets. And I think that's why these solar plants and I think phase 1 and phase 2 are going to go such a long way to help us with these projects as we reduce our costs and we shift towards a far greener, renewable energy consumption.
And is it realistic to assume that Harmony's mines can be powered with solar power?
Well, we'd like to think so, but not at the moment. I think a lot of that depends on battery storage technology. I mean, at this stage, we can't send 30,000 people underground and hope for the sun to come up. You know, we do need to rely on baseload power. But I think we are moving in the right direction, Martin. I mean, certainly as it relates to the various alternatives which we've got at our disposal now. I mean, solar power as part of phase 1 and phase 2 is just one component of our longer term plans. I mean, we are looking at other, I think we are looking at other energy sources such as LNG. We are looking at things like wind wheeling. I mean, I think we've also got to be cognizant of the fact that Eskom, will most likely transform their energies, supply over the next two decades as well. So, I mean, that's also a benefit which we're not really taking into account at the moment, is Eskom's transformation. So we're doing everything we can on our side to make sure that we reduce our reliance on fossil fuel. Solar plants will obviously go a very long way in reducing our costs and also our reliance on fossil fuel, but there will need to be more. We will need to do more, Martin. And I think, Harmony is very clear about working with the government. I think we've got a very important role to play as South Africa's largest gold miner. And I think the best approach is for us to understand what's the best way to find solutions that benefits everyone. And I think, the solar plants are certainly a step in the right direction, but we believe there's a lot more that can still be done.
And what about the water in your mines? Can you not do more with that and maybe green hydrogen from that?
We've been exploring those options. I mean, certainly as it relates to our big pumping stations like the Margaret Water Company in the Vaal area. We've got the Covalent Pumping Company in the Mponeng or the Western Wits area. A lot of those mines are actually just, a lot of those stations are there to just keep the mines dry, that we can operate, for example, at Mahakut and at Mponeng. But we could certainly do a lot more with that water. And I think those are things we are busy looking at. As I said, Melanie Nadi from our exec for sustainability, she is working with a number of our peers to actually understand how best we could use this water and turn it into something which can supply our host communities. So, I mean, those are all various options. And green hydrogen, we haven't really explored at this stage in too much detail, but it's certainly more around the case of providing potable water for the communities. From an agricultural perspective, we're pumping millions of liters a day. So there's certainly an abundance of water available for us to use.
That was Creamer Media's Mining Weekly, speaking to Jared Kutzer, the head of investor relations at Harmony Gold Mining Company.